a couple of weeks ago, I warned about a potential scenario that we could see some sort of blow-off top. And I believe that is exactly what we are currently seeing. And it is Sunday night. It is 9 p.m. Eastern Time right now. And I believe odds are very good that we will put in the high either on Monday or sometime later the upcoming week. And that prices after that go for at least a couple of weeks south. So I think it makes a lot of sense to record an update, and this one here will be just a Mickey Mouse update because I don't have all the data and all the slides that I would like to put in, but I think it is important that we can prepare ourselves for what is likely going to happen next week. So, and in the first version of the blow-off top video, I talked about sentiment being, and I called it back then, two-sided, which was a poor way to phrase it. It was polarized sentiment, and that has shifted since. During the last 2 weeks, we have now, and when I say we, the market has come to some sort of consensus that the fundamentals and the momentum have now aligned, and before the stock market was simply just running ahead of fundamentals and fundamentals had to catch up. At least that is what you might believe if you read financial media or mainstream media, because that is what they have been putting out over the weekend. And it also is now aligned what the little guy and the big guys are thinking, because before this blow off top that we saw the last couple of weeks, the little guy was the, what is the saying, the go happy go lucky kind of a guy. Yeah, anyway, he was just simply buying calls, not worrying about why prices were going up. We are just chasing momentum, which means let's buy some calls. And they have been rewarded over and over, while all the big guys, the professionals, the people who are very well educated but still don't know nothing, got screwed because they have been fighting this rally since it began on March 23rd. But what has changed over the last 2 weeks, that now the little guy or the big guy agrees with the little guy. Yes, we have now fundamentals agreeing with momentum, and yes, it's gonna be a beautiful V-shaped recovery. All that happy nonsense what mainstream media is now reporting. I simply call this capitulation. The big guy has capitulated on the bearish view. The little guy, who has been right for weeks on end, is going all in, is buying more calls, and I have a couple of slides to actually back this up. So I think we are seeing capitulation as of right now, and if I had to bet money on it, I would say on Monday we will put in the high, and we will not exceed that high for quite some time. I do not believe it will be the high for the rest of the time being, but for now I believe it will be the high. And this is the chart here that I posted in the first video, in the first blow off top video. This is the S&P 500 future. We were at 29.91 and a half at that time, and now this is what price has done since. So, and this is what I was looking for a move vertical to the upside. So S&P 500 has been doing that. It went above 3,000, and now we are seeing this. I mean, I don't know a better word than this capitulation, this euphoria. That both sides of the trade, the momentum guys going aggressively and taking more risk, buying more calls, and the big guys, the professionals, simply giving up and say, hey, man, I was wrong with my short bets. I cover everything, and maybe I actually flip-flop long. I believe that is what we are currently seeing. Then the second chart that I had in the last presentation was the NQ, was the NASDAQ 100. At the time back then, we were like at 9,450, something like that. Oh no, 9,540, the other way around. So we were 460 or 458.75 points away from 10K back then. And since then, we have done this. So we also went vertical. And what I wanted to see is that we take out the all-time high here and that we would approach something close to 10K. And odds are that we will do exactly that on Monday. Then I had another slide in the first video where I was referring to, and this is a chart that I'm borrowing from Sentiment Trader of Twitter, and here the blue line was the options activity of the little guy, people who are buying 10 contracts or fewer, who are buying calls or shorting puts of that size. And since no institutional money manager would do that, they would not go with 10 contracts, they would go in the hundreds. We know this is the Robin Hood trader, this is the little guy, this is one of us. Whoever is part of this blue curve is a little guy. And the further this blue line here goes north, the more excited we are, the more excited the little guy is. And it is something like a sentiment indicator. And it was already extreme a couple of weeks ago. But this is what it looks right now. So if that was extreme a couple of weeks ago, then look at what this here is. And that is also, again, from Sentiment Trader. He updated that a couple of days ago. So we are seeing what I call the euphoric phase of the retail investor, of the Robin Hood trader. And this is not necessarily a sign of a top, but it is one of the signs we have to keep in mind, because that is just the nature of us being people, that, hey, if we have been making money for a prolonged period of time, we think we are the smartest people on the planet. And it is not because of luck, it is simply because we are so brilliant. And because we are brilliant, we can simply throw caution in the wind and just borrow against our 401k, put it into out of the money calls, and on top of it, let's borrow some money from grandpa and grandma and put a second mortgage on the house and put it all in out of the money calls. And this is what I believe we are currently seeing, that it looks like the market is so easy, everybody has figured it out, let's put it all in there. There was one more slide, and I unfortunately do not have an updated version of this yet. I sent an email over to Sentiment Trader. Hopefully he will get back to me soon that I can update this chart. And this here is simply showing us what is the SPX, the S&P 500, doing on top here. And this is now a month old. This is from May 5th. And it was telling us here in the blue line at the bottom what futures were doing. So I realized my delivery is awful, because what I was trying to do is, whenever I said smart money, I was doing this fake cough. I heard people say, "Hey man, are you okay? You were coughing in the video." Man, it's like I was trying to call the people who supposed to know better, the smart people, not so smart. That is what I was trying to do. Apparently my delivery was terrible, so nobody got it. But going forward, if I have this awkward cough, it is probably not that I got the corona fever, or got like some pneumonia or some cough. It is probably because my delivery simply sucks. What I'm trying to say is, the smart people are idiots, and they have been shorting this rally all the way up, and we have since then seen price go way, way, way higher than this. So I am assuming that there has been a correction of that the futures market is now not as short as it was back then. Once I do have an updated version of this graph of this slide, I will present it to you. But simply based on the news that I've been reading over the weekend and how price is behaving, that we are going vertical, I believe odds are good that the smart money, remember, right? I'm not sick here. I am just saying the stupid money, which is supposed to know better, aka the smart money, has probably covered at least some of their short positions in futures, so they have capitulated. So let's take a look. Where are we in this capitulation phase? The little guy has shown us signs of euphoria. We see that the big guy has been liquidating. Prices have been moving higher, and they have been moving higher like vertically. This is exactly what we wanted to see. Now we are simply waiting on the second leg of that blow off top, and that is the leg where price goes lower. And we talked about the potential trade. There was a trade to play this blow off top to the upside. Back then I suggested to do it via Tesla short-term calls, but we don't even have to worry about that, because now we are past that point. We don't want to play the move to the upside anymore, because I think that move has pretty much played out. Now we simply need to focus on how are we gonna play the move to the downside. And there are two different ways to approach this. One is to play it via QQQ puts that have 2 or 3 weeks until expiration, and maybe go a little out of the money so that we can take advantage of an increased volatility in case prices do revert to the downside. This is the more passive way of playing it, but this is not the way I will play it, because I like to control my risk. So I do not want to have too much exposure overnight. So I want to play it intraday as much as possible. But if you happen to have restrictions, intraday restrictions, that you cannot have more than these 3 intraday trades within a 5 day period, then QQQ puts that have 2-3 weeks left until expiration might be the best way to play it. I have already created a watch list of potential tickers that I want to play to the downside. But when I do that, I would probably do it intraday, maybe for 24 hours, but not much longer than that, simply to control my risk. And if you need help timing those kind of trades, you can find more information on quantiyeti.com. If you have a question for me personally, you can hit me up on StockTwits. My handle is @OptionBob.